Hello everybody, it's Steve with F45 Trading. I thought I'd do a quick video and so you could put a face to the name as well too. You've probably been listening to my voice narrating charts for a lot of years, so great to meet you. And I wanted to talk a little bit today real quickly about a trader's trap that I came across today in my trading. Now, this trap happens constantly. I'm sure you've seen it before and maybe you hadn't known what it was when you came across it. A lot of times the results are, though, that you get into the market thinking it's going to go one way and it comes back in a big hurry and it slams you out of the trade and takes your money. So I wanted to show you what that looks like and try to avoid it and show you how to actually capitalize on it if you can. So this specific pattern is not new to me. I didn't create it. It's called a trader's trap or a market protraction, or a turtle soup is another great name for it. It was actually outlined in a book called Street Smarts by Larry Connors and Linda Raschel, who authored it. And so it's not new. This concept's been around for a very long time. And it's actually tied around a lot of economic news events. So at specific times of the day, you can actually go in and see this in the market for yourself. Usually happens around when major economic news events come out, such as an interest rate decision, major economic news like jobs numbers or something like that. This particular trader's trap that I'm going to talk to you about actually happened in the Euro USD today. So, and what you need to do, which is very important, is to get yourself aligned with a great news website that tells you when all the economic data for all the different currency pairs that you follow are set to come out. I use Forex Factory. It's a great free resource, and it tells you specifically the time of day when these come out. So then you're not surprised when the market all of a sudden shoots out of nowhere and runs 30 or 40 pips in one direction. You can anticipate it and you know it's coming. Now, what you'll find is when it happens, it typically happens when the market is consolidating. So if you look here, I've got an example of when it happened today. The market was in a straight sideways consolidation for most of the morning, okay? This range here was maybe between 15 and 20 pips or so, and it really just sort of banked around all day long, not going anywhere. Now, a lot of traders, they'll sit there and they'll look at that and they'll say, wow, they're really building positions up. I think they're probably going to go long, but I don't know. There's a lot of reasons for this thing to go short. What you definitely need to do, step one, make sure you know which market direction price is trending in. Did it just come out of a period of coming down from really high prices, or did it just finish moving up from really low prices, or is it just starting to move up out of a downtrend, or is it just starting to move down from an uptrend? Figure that out before, and usually on the daily chart, and figure out the market bias, obviously. Where is it going, up or down? And then when you get into these consolidations, you'll notice I'm on a 5-minute time frame here. So this actually happened for probably a good 6 or 7 hours before the lead up. And once you figure out that market direction, then you can kind of better anticipate which way the market should break out. So as price is moving along, you can see what happened here. We stagnated for most of the day, and then all of a sudden, price started creating these highs here and these lows here, and then it just shot up out of nowhere right there and created a market high. Now, a lot of people, what they'll do is they'll jump all over that and say, the market's going long, I got to get in on this. And what they'll end up doing is they'll enter a long position right up here, right at the top of that protractionary phase, and then the market drops out from underneath them, and it ends up running the other way, and it stops them out, and they lose money. And then they wonder, well, what went wrong? Well, what went wrong was the market does that for a reason. It sucks people into these moves, and they think it's going long, so they get in. They're bandwagon jumpers. They get in on it. The easiest way to protect yourself, one, know what economic news drivers are coming out ahead of time so you can anticipate it. This particular move happened right at 8:30 a.m. New York time. So the market ran up and then it dropped. So you can predict that when it happens. Number two, know the market bias, know the direction. Where should it be going? Should it be going up that way, or did it just come back down from that way? Should the move be more higher probability that it was going down to the other side? So figure out those two things first. And then from there, the third thing and most important thing is just wait for the market to come down. So does it run up out of the consolidation and just keep running up? Well, if that's the case, wait for a brief retracement and then get in right here for the market to go higher. Or what you can do is when the market shoots up like that, wait for it to come back down to the original consolidation if it does. And if it does, and it's going to be bullish, it shouldn't go back into that consolidation. Very simple. It should not go back into it. So just wait. If it does go back into it and starts going down like it did here, then you'll know it's probably not a longer term higher price trend. So don't go long. Wait. Maybe it's going to go short. And in this specific instance, you can see here what the market did. And this is exactly what it did today, is it ran up and then it dropped all the way down. And the real move was lower. And you can see that right there. Okay. So I hope this helps you out, guys. I've got a lot more of these to come. So just make sure you click down on the bottom right-hand part of the screen here and click subscribe to my YouTube channel. This is the first, hopefully, of many series that I'd like to do with you guys, identifying tiny little market trading traps like this to hopefully help you out and to gain some more profitability. So let's go out, crush the markets. Thanks for watching. We'll see you in the next one.